Are you aware of the major changes coming to the Des Moines real estate market? Have you even wondered what the future of housing in Des Moines looks like? Whether you are living in Des Moines or thinking about moving to Des Moines, the city's housing strategy plays a huge role in how much money you keep in your pocket every day. And let me tell you, there are some big changes and challenges coming our way. Des Moines has made incredible progress over the last 20 years in becoming regionally more competitive. But even with that progress, we're facing some serious housing gaps that could impact affordability, growth, and overall market health. The city recently released a 33-page document explaining their plan, but I'm going to try and give you all the important information in about 10 minutes or less, so you don't have to read the whole thing. Let's jump in. Welcome to the channel. My name is Blake Allowelt, owner of the Bravo Ridge Group. I wanted to make this video for you to be aware of the big changes coming to Des Moines. They are planning on making some huge changes with redevelopment of the city itself and restructuring the school system, which I cover that in another video. First, let's understand the current housing market in Des Moines. Before we get into solutions, let's talk about where things stand right now. The good news, the Des Moines housing market is generally healthy. Home prices remain relatively affordable compared to other markets, and homeowners continue to see solid returns on their investment. But here's where things get tricky. The overall affordability in Des Moines isn't necessarily because wages are high. It's because the large percentage of homes are older, smaller, and in need of major repairs. In fact, there are over 40,000 homes in Des Moines that fall into this category. That's great for lower income households who need affordable housing, but it also presents some challenges. Many of these homes are located in concentrated areas, weakening the city's ability to compete with the surrounding suburbs. There's a market gap. Higher income households are not choosing to buy in Des Moines, leading to a loss of wealthier residents to Polk County. And there's an affordability gap. Lower income households are struggling with costs, not because of sky-high rents, but because wages are too low. So here's an eye-opening stat. The average home sale price in Des Moines is about 60% of the average home sale price in Polk County. That means people with higher incomes are opting to buy in the suburbs rather than Des Moines itself. At the same time, there are 12,000 fewer households earning over $100,000 in Des Moines than there should be based on population expectations. And on the flip side, there are 10,000 more households earning under $50,000 than expected. And here's the kicker. The market is not going to fix this on its own. So what is the city doing about it? But before we cover how the city plans on addressing these changes, I ask that you hit the like, subscribe buttons down below. It's 100% free and helps our videos reach more people that can use the help. Now, how is the city tackling these housing challenges? Des Moines is already investing a massive amount of money into housing and community development, over $64 million each year. That includes funds from state and federal resources, sales tax revenue, what's called TIF or tax increment financing, capital improvement plans, and housing development incentives. But is that enough? Well, not really. The city's current spending is split between the market gap, programs designed to attract wealthier buyers to Des Moines, and the affordability gap. There are initiatives aimed at helping lower income families stay in stable housing. And while there have been some major success stories, like the Invest Des Moines program, Habitat for Humanity, and the Ion Repair program, the problem is that these programs alone aren't enough to make a long-term difference. So why? Because the rate of growth in Des Moines is slowing down, and that's not good for home values. The next 20 years will see a significantly slower rate of population growth around Des Moines compared to the previous 2 decades. And if we don't make some strategic changes now, Des Moines could fall behind, losing even more buyers. At this point, the city has 3 different paths it could take. 1, stay the course. This means continuing with the current programs and funding levels, spending around $59 to $64 million per year to support both market-driven growth and affordability efforts. The pros to this are that it keeps the current system running without any major disruptions, and it continues funding successful programs like Invest Des Moines. Cons are, it might not be enough to truly close the market and affordability gaps, and it could allow Des Moines to continue to lose homeowners. Number 2, cut back and reduce spending. This would involve scaling back housing initiatives and focusing only on the absolute essentials, reducing spending by around $14 million per year. The pros to this are that it saves money for other city priorities, and it forces the market to play a bigger role in determining housing outcomes. The cons is that it could make affordability issues worse, and it might slow down investment areas that need revitalization. Number 3, grow the effort and expand the investment. This would involve doubling down on housing efforts, investing more in home repairs, new construction, and revitalization efforts across the city. The pros to this is that it could attract new buyers and stabilize struggling neighborhoods. It'll also help create a more competitive housing market compared to what the suburbs have. The downsides, it requires a much larger financial commitment, and it needs buy-in from both public and private sectors. Right now, the recommended strategy is to grow the effort. meaning a major investment in housing programs to make Des Moines a more attractive place to live. One of the ambitious parts of this strategy is something called the whole block redevelopment. The idea is simple. Instead of fixing up households one at a time, the city would redevelop entire blocks, removing outdated homes, upzoning areas for new redevelopment, and making sure nearby commercial areas also get an upgrade. Each whole block redevelopment project could cost around $15 to $20 million and require a mix of public, private, and nonprofit investment. But where will these projects happen? The potential locations for redevelopment include East 14th and Euclid, University Avenue near Drake University, the Ingersoll Woodland Corridor, Southeast 14th Street, Merle Hay and Franklin, the Market District, and Southridge Mall. Each of these areas has potential for growth, but they need serious investment to attract buyers and businesses. So what does this all mean for you? Well, if you're looking at selling your home in the future, these changes could increase demand in certain neighborhoods, potentially boosting home values over time. And if you're looking to buy a home, the housing market is still affordable compared to the surrounding area, but competition could increase in the coming years as blocks are being revitalized. And if you're an investor, pay close attention to the neighborhoods targeted for redevelopment. These could offer great long-term potential for faster appreciation. So what's the bottom line? Housing in Des Moines is changing. And if you're thinking about buying, selling, or investing, it's important to stay informed. If you found this video helpful, don't forget to like the video, subscribe to the channel, and share the video with others who you think need to be aware of what's happening in our community. See you in the next video.